Welcome to this webinar called Budgeting and Financial Reporting. My name is Markus Pasterk. I'm the Administrative Director of BBMRI ERIC, the Biobanking and Biomolecular Resources Research Infrastructure. And I want to show you today how to set up a budget for research infrastructure and how to report on the finances. I would like to start with a disclaimer beforehand. As an example, I'm using the financial details of the BBMRI ERIC budget of the year 2015 to explain how the budget was set up, how the profit and loss accounts are, and how the balance sheet looked like, and how you can read between those documents. In a summary, I will show you this example on the budget, how the profit and loss statement is set up, what a balance sheet looks like for that particular year, and also how the connection is between the budget, the profit and loss statement, and the balance sheet. At the very end, I will also show one slide and say something about the audit, which is typically done at the end of a year. Now, when we talk about accounting and budgets in public bodies, most institutions use the cash method or single entry bookkeeping system. You have heard in previous webinars and lectures about accounting, double booking, but here the typical scenario is the cash method. And I'm showing the example from 2015. And the link on this website refers you to the website where you can download the report as a backup document. I also would like to stress the limitation of this example, because all the national or local activities are not part of the BBMRI ERIC budget, and therefore they are not included here. But we have several common services which I will refer to during my presentation. Now, this is the very first page of the core budget of BBMRI ERIC, and what you see here is the approved numbers approved by the assembly of members, and then at the end of the year the actual figures as they were accounted. A typical budget consists of a section of earnings and a section of expenditures. And in especially non-for-profit institutions, the net earning normally is to be set at zero. Now, when we have a look here on the left side of the presentation in the section of earnings, you see what most ERICs and most research infrastructures contain of is the membership contribution. I'm not talking about how to set up the membership contribution, how to calculate the amounts, because this is different from research infrastructure to research infrastructure and can very often be found in the bylaws, in the statutes. So this is not about to explain how to valorize them, but just take it for the moment that there is membership contribution coming into the institution on the earnings side. When you look on the right side, you also see that there are some other contributions, namely in our case the hosting country contribution. Austria is hosting this research infrastructure and has granted a special donation on an annual basis for hosting the headquarters of our research infrastructure. We have certain common services. These are services which are available for researchers for BBMRI ERIC countries. And here those countries are paying a voluntary hosting contribution, and you can see them also listed on the right side above. Because the BBMRI ERIC is also participating and was that year participating in EU projects, you also see that the indirect costs, which is a calculated amount of grants coming from the EU, are here listed under earnings. And for the year 2015, the approved earnings was 2,135,181, which you can see in the middle on the right side, but the actual figure was less, namely 1,779,059. And the reason for such a difference in the actual figures is that sometimes countries are not paying their contributions in time, or that you have calculated to have countries in your membership list which at the end did not join for the research infrastructure. The second part of each budget contains the expenditures. And typically here in our scenario, we have expenditures of the headquarters plus the expenditures of the common services, which I already referred to. ELSI here stands for Ethical, Legal and Social Implication, IT for Information Technologies, and SF for Stakeholder Forum. There were financial figures approved for those three pots. And again, you see at the end of the year what the actual spending was. And again, you can see that during this year, the actual spending was lower than originally foreseen and approved by the Assembly of Members. That was also a consequence of the reduced income generated. Still, there was a net earning at the end of 273,000 euros, which is then taken over into the next year's budget. But this is what a typical budget of a research infrastructure headquarters plus some common services could look like. Now, let's go into the same year to see what the external budget was. BBMA ERIC was very successful in participating in European Union activities, both of FP7 as well as Horizon 2020, and also in the IMI program, that's the Innovative Medicines Initiative program, co-funded by Horizon 2020 and the European pharmaceutical industry. Again, what you see was the approved figures by the funders, approved and listed through the grant agreement or the pre-financing payments. And you see the actual figures in the second column. Again, the difference here is because sometimes the money is not paid out in that specific calendar year. And of course, in this cash method, you will only see the earnings and expenditures of that specific calendar year. If either invoices or sales come in later, they are not attached to that specific calendar year anymore. You typically see also that a lot of the funding which you receive from the European Commission or from any funding agency is a pre-financing, because typically EU grants, in EU grants you receive at the beginning of a project phase a pre-financing which is somewhere between 35 and 45% of the overall amount, and only after financial reporting you are reimbursed for your expenses until the very last cent is reimbursed. In addition, you're receiving more money because very often the financial reporting or technical reporting period is longer than one calendar year, or is even going across several calendar years, which means you put certain reserves for money which you have received, but you will only spend it in the following years. And that's why you see in our case, still on the left side under the chapter Reserve for Pre-Financing, amounts for such projects. In terms of expenditures, again, we are subdividing expenditures into expenditures of the headquarters, in our case, of the common services, of potential linked third parties, or in those cases where BBMA ERIC is the coordinator, we also show the financial figures for other parties or partners. Important to understand here is that as the coordinator, in this case of the two projects listed, Adopt, BBMA ERIC, and RI Train, BBMA ERIC as the coordinator receives the total funding for all the partners and is then forwarding those funding to the participating beneficiaries. But in a cash method, it goes through your accounts and you have to list those earnings for the total, but also show at the same time then under expenditures that you are forwarding those grant money to the partners. And what you see here is that in this specific case, in this specific year, the net earnings of the for external funding was thought to be 1,476,359, but because there was much more money already paid out in the pre-financing, that there was an actual net earning of over 3 million. Now these are, as I said, cash figures which are typically appear when you describe a budget in the two phases of earnings on the one hand and real expenditures in that specific calendar year on the right side hand. In the next slide, I want to have a look on the profit and loss account. And just to remember, I'm using one definition of a dictionary, namely the Collins Dictionary of Economics. And here you can read, profit and loss account is an accounting statement that shows a company's, a firm's sales revenue generated over a particular period and all the relevant explicit costs incurred in earning that revenue. In the account, the cost of goods sold is deducted from sales revenues to calculate gross profit. Then the other costs involved are deducted from the gross profit to show any net profit earned. And I'll show you that again in the case of the budget example we are using here of the year 2015. Now a profit and loss account in our case looks as the following. You have here on the left hand side the subheadings of the profit and loss account, namely we start here with the turnover, then followed by the operating income, potential raw material and expenses. You will always have staff expenses and depreciation, and you also will have some operating expenses, which results then into an operating result. Then you might have some other interests or other income, which provides you then with the financial result. And the result of ordinary activities, deducted some taxes if you have them, which gives you then the net profit. And again, taking the allocation revenue reserves, you will be able to show your net income. Now, how does that look like in the real world? Here again, on the right-hand side, the profit and loss account of the calendar year 2015, showing here both the figures of 2014 as well as 2015, because it is very typical that in a document, in a profit and loss account statement, you are showing not only the current year you are reporting on, but you also show how that was covered in the previous years to see also how things are developing. What we can see here is, as I have shown, the total turnover of the year with 3.6 million, some operating income, in this case here is of 66,000. We had a lot of staff expenses, typically which comprises of salaries, severance pay, social security payments, and other expenses of employment benefits. There is always a depreciation on the fixed assets. The bigger the machines, the equipment you have, the higher the depreciation will be. In our own case, for the headquarters, it is relatively modest. And you will always have in a profit and loss account operating expenses. This is to run the operation, the headquarters. That will include fees, maintenance, insurance, travel expenses, renting costs, office costs, other transaction costs, maybe some legal and consulting costs, and other expenses, which in our case results in other operating expenses. Here in that specific example of 648,000 euros. That deducted from the turnover gives the operating result, which in our case was roughly more than 2 million. The interest is rather small here in our own case, so that the result of the ordinary activities is 2,088,356 euros, and very little taxes were paid, which in most cases of other research infrastructures will be the same or very similar, which gives then a net profit. Then you have to allocate the reserves. This is typically that money which is reserved for activities in future years, which then generated the already known net income of 54,000 in that specific year. This is a typical profit and loss account, which you will see in many different research infrastructures providing such details. Now, something very different is the balance sheet, and that's the third report I want to refer to. And what is a balance sheet? You have heard in previous webinars and lectures about it in much detail, but I just want to summarize before we go into the details that this is a statement showing the value of a company's asset and its liabilities at a given point. So in contrast to the profit and loss account, which we have seen before, which is covering the activities on a period of time, this is now at a time point. Another definition is that it is a condensed statement showing the financial position of an institution, of an entity on a specific date. And what you will see on balance sheets is always the information what assets an entity owns, how it is paid, how it paid for those assets, what it owes, which means its liabilities, what is the amount left after satisfying the liabilities. The balance sheet data is based on a fundamental accounting equation, namely that assets equals liabilities plus owner's equity. And it is classified under subheadings such as current assets, fixed assets, current liabilities, long-term liabilities, and so on. So this is the definition. It gives the value of an institution at a given specific point as a date. And now let's have a look how in our case 2015, so at the end of 2015, the balance sheet for our own research infrastructure looked like. What you always have on the left-hand side are the assets and the liabilities and the equity on the right-hand side. You also have learned that the left and the right-hand side, the credits and the debits, are equal of size, and you also see that here that in our own case the assets, the total assets is 3.8 million, and exactly the same amount on the debits on the right-hand side with total liabilities of 3.8 million. Now looking a little bit deeper into the balance sheet of our example, showing again on the left-hand side, starting first the fixed assets. And the fixed assets are the intangible and the tangible assets. in our case, so for example, software or other equipment or factory and on-office equipment. The current assets, which is the second part of the assets, comprises the receivable and other assets, the cash and the deferred expenses. I will show in the future slides how you can get information from the P&L account into the balance sheet, and where it helps you to understand easier to follow up when you compare those two documents. Now on the right hand side, on the liabilities, that consists of four parts here, namely the shareholders' equity, the provisions, the liabilities, and the deferred income. The shareholder equity consists of the accumulated profit and the retained earnings. And you see the figures on the right hand side. Second part, as I said, the provisions, then the liabilities, both in trade as well as in other liabilities, the deferred income, again totaling the liabilities, as we said before, equal as the assets, namely in our specific case 3.8 million euros. In the next slides, I want to show you how you can read between those different documents and how you can come from a budget report to a P&L and to a balance sheet reading. The budget, just to reiterate, is the plan for the earnings and expenditures within a time frame. The P&L statement shows the revenues and expenses during a set period of time, and the balance sheet, typically done at the end of a calendar year or at the end of a reporting year, is the picture of the financial positioning of such an organization, showing the assets, liabilities, equity, and how much an organization is actually worth. For this example, I'm showing you always on the left-hand side data from the original budget plan, and on the right-hand side the related entries in the profit and loss account. So here again you see in our case for the year 2015 the membership contribution of the members and observers of BBMR with their actual figures. And when you look into the profit and loss account, now this is a little bit more detailed than in the summary which we have seen before, you will see that there is actual in the turnover part of the profit and loss account. You will see, for example, that figure of the membership contribution. Now this, in this specific case, is a little bit higher than in the budget table. And in this case, the reason was that there was an advanced payment of one country already received in 2014. On the next slide, the second part of the budgeting was the hosting country contribution, and then later on also the EU contribution, namely the indirect costs. Again, on the left-hand side, you see the appropriate parts of the original budget, both approved and actual figures. And on the right-hand side, when you look into the profit and loss account, you will find those figures, or at least most of those figures, again in the profit and loss account. Here in our case, again under the term of turnover, namely the next lines: headquarter hosting contribution, hosting country contribution for the stakeholder forum secretariat, and for the common service LC. In this case here, there was no deviation, but also the indirect cost are shown here, but the calculative value is not a corresponding item in the annual accounts. Following the budget reporting of expenditures now, one of the biggest expenditures in typical research infrastructures are salaries. And here you see from the budget the two lines salaries and fringe benefits. And again, you see that those amounts are appearing, but in a very different setting, in a typical P&L account, because in contrast to a typical budget where you only show the figures, you have to split the expenses into salaries, expenses for severance pay, expenses for social security, and expenses for other employee benefits. And in our own case, you can see all the detailed figures for those categories of staff expenses. In terms of deviation compared to the budget, it's important to understand that the major part of the remaining difference between the budget and the annual accounts can be found under the common services, core budget, and project budget headquarter personnel, because again, here in a P&L there is no distinguishing between what is core budget and potential external funding. When you further go down in the original budget, you will see the investment. So these are typical headquarter expenditures. And again, when you look into the P&L, you will see those amounts available, but shown in a different way. And the reason for it is that the investment can't be shown directly in the balance sheet. Here it's not the P&L, it's the balance sheet, but it can be tracked in the summary of fixed assets, because the annual accounts covers the depreciation, which is the yearly value loss. And you see the figures of that here on the right hand side. The next slide shows you again the expenditures of the headquarters from the original description of the report for the core budget, and how that can be translated or connected in reading the P&L accounts on the right hand side. I'm not reading through the individual figures. They are described with different colors, but what you can see is that most of those figures shown in the budget are, again, because it's a budget financial year, are shown in the P&L account, but it is obviously split into different sections following the typical accounting rules, here in our own case, into office and administration costs, renting costs, maintenance costs, operational costs, and insurances. But most of those data can be directly taken also from the typical budget line. There are some minor delimitations, for example, services which were rendered in 2015 but only invoiced in the following year. That's a typical scenario when invoices are received outside of that calendar year. And here in the difference in the office net is the VAT that was only reimbursed later in 2015. I make a short deviation here and have to explain what that means. The Austrian tax authorities are treating our own research infrastructure for expenses occurred within Austria as like a company, which means we have to pay the VAT but are reimbursed on a quarterly basis later on. And for expenses which are incurred outside of Austria, we are treated like an international organization, which means we do not pay the VAT upfront. But I have to explain that because the figures you see in the budget, in a typical budget, are including VAT, whereas a P&L will always show the net amounts. We can continue. Again, some examples of expenditures In this specific case, some expenditures of an office with office and administration costs, distribution costs, or other operating costs. And again, the colored lines show you the connection between the actual budget report and the P&L account later on. The same is true on that specific case in terms of the elimination for some services which were produced in 2015 but only invoiced the year after. The next slide gives you some details on, for example, accounting, legal advice, consulting. Again, you see they appear on the left-hand side in the budget table and are then shown on the right-hand side under different sections of the P&L accounts, namely here the legal and consulting costs and distribution costs, among some of the other typical accounting entries in a P&L account. In terms of the external funding, you have seen that we have split the budget into the core budget and the project budget. But in a P&L, this cannot be split. It is in one profit and loss account. But what you see is that the accumulated earnings are shown in the turnover section of the profit and loss account. So here, again, with the color code, you can identify where the original figures from the budget tables, from the budget report on the left-hand side, actually then appear in a profit and loss account, so that most of the profit and loss account figures, there are exemptions, but they are being traceable in the original budget table. The same is true for expenditures of the project budget, where we have seen that there is also expenses in terms of personnel. And the deviation here is because the indirect costs are calculative values, so they have no corresponding item in the annual accounts, and the personnel costs partially are derived from the staff expenses here in that specific example. A specific item are linked third parties and other parties. In EU projects where BBMR ERIC can act as a beneficiary, can be linked to other parties, and typically the scenarios where a national node of our research infrastructure can be linked to BBMR ERIC. It's called a linked third party. The money go through, the money flow go through the beneficiary, in our case our own research infrastructure, but is then forwarded to that party. But it is also that if you are the coordinator, as I explained before, of an EU project, you will receive the total grant funding or the different installments, but you have to forward such funding to your partners. And of course, and now we're looking on the right-hand side, in the profit and loss account, again, you will see those accumulated figures here, a little bit more than 506,000 for that specific year. So it is possible from the profit and loss account to understand where and why figures in the original budget appear and how they are related. Now, my very last two slides are about the audit of accounts. We have seen that it is possible to show the interlinkage between the original budget planning and the budget reporting with the profit and loss accounts and also with the to a certain extent with the balance sheet. Now, all these figures are important, but you always need, and most legal systems, most legal accounting systems need an official audit to prove that your accounting is correct so that they can be published later on. What is an audit in that specific case? It's a systematic and independent examination of the books, the accounts, the statutory records, any documents or vouchers of an organization to ascertain how far the financial statements, as well as non-financial disclosures, present a true and fair view of the concern. And why do you do it? In our own case, because it is fixed in our statutes and very likely in the statutes or bylaws of your own research infrastructure. You will have a certain reference to the audit, to an audit of your accounts. And in our own case, in Chapter 2, Article 8, in paragraph 7, it says, the Assembly of Members shall appoint external auditors to examine the accounts. The external auditor's appointment shall be periodically renewed according to the specific provisions stated in the financial rules as approved by the Assembly of Members. So we have to have an external auditor who is, after the profit and loss account statement is being done and the balance sheet being prepared, is auditing those documents to verify that they are true and fair. Now with this, I would like to acknowledge two institutions, namely in our own case, the institution which is doing on our behalf the accounting. This is Deloitte Wirtschaftsprüfung Styria. And as an auditor, as an external auditor of that year, we had contracted Ernst & Young from Vienna. What you have heard is how to link, how to set up a budget plan, link it with a P&L, identify the necessary linkage also to a balance sheet, giving the example of our own research infrastructure of the calendar year 2015. I'm hoping that this can serve you as an example in digging into the field of financial reporting, and would thank you very much for your listening. Goodbye.